Hi, welcome back to today's morning report on Tuesday the 2nd of June with me, Rich Perry, market analyst at Handtech Markets. Moving on to dollar yen now, and this run on dollar yen, it has been incredible, hasn't it? You've had now 11 out of the past 12 days where you've seen a bullish day on dollar yen, just that one in the middle there on the 21st of May. Chart's still pushing higher, and the breakout level is still at 25.70. So that is still the breakout target. However, I'm still a bit I'm still cautious on this move higher because we've got this continuation of these bearish divergences. Now, you've still got the highs effectively that we had in late May, and then effectively that lower high on the RSI. Same picture on the MACD lines as well. So the fact that you're still pushing out to higher highs, but you're still effectively posting that sort of a position of a lower high on the momentum indicators does leave you certainly leaves me cautious as to how to chase this one higher. Ultimately, again, we've had a bit of a sort of an intraday correction from that high of around 25 figure. And it's just drifted back since then, about 50 pips off the high now already, as you see this RSI unwinding back. It could be interesting to see if this RSI continues to go lower, because obviously the lows have come in around the 44 mark, currently around 50 on the RSI on the hourly chart, but it will be interesting to see if that comes back. Also, just noticing that the 89-hour moving average has capped a couple of the corrections, so that comes in at 124.12, so that's about 40 pips away from where we are at the moment as well, and that will continue to rise, so you wouldn't want to see the dollar yen moving below that either. So what we've seen actually overnight is a pull back towards this support of the breakout, and if you start to see that support sort of falling over, again, that could be a signal that potentially we're sort of beginning to see a little bit of profit taking. For now, though, you wouldn't be selling this. You'd be sort of more cautious on the long side, I think, more than selling it, because you can still see the rallies going. You can still see the price pushing out to higher levels. It's just the fact that the momentum indicators at some stage, I think, are going to tell on this, and it's going to start to fall away. It's difficult to say exactly when, but you'd certainly be looking out for, I think, this 89-hour moving average now, and also the support breaking down, which comes in around 124.40 area. If you start to see it trading in the low 124s, then perhaps you could see a little bit of pressure building to the downside. But at the moment, it's just holding on, and it's just unwound again. But ultimately, I still see that at some stage you're going to see a correction on this dollar yen, because you've had such a strong move to the upside. The profit taking is likely to be seen at some stage. So chasing it with a blind, any sort of naked long positions or anything like that is going to be increasingly risky with this move, purely because it's becoming stretched, and the momentum indicators just beginning to, as I said, roll over. The interesting that we've seen that just the MACD line starting to perhaps just come back together a little bit, as we've seen in the last day or so. So yeah, it'll be very interesting to see how this one moves. But certainly the breakout target is still 125.70. That's from the measured breakout level, from the width of the trading range projected higher. However, just in the again, we've seen with this lower high on the momentum indicators, that just gives me cause for concern as to whether we should be chasing this one higher or not. So I wish you good luck in your trading on dollar yen today, and I'll speak to you later. Thank you.